what happens when you combine too many ETFs with not enough airtime? You get double headers. And that's what's coming up on today's episode of ETF Battles. Welcome to the show. I'm Ron DeLegge. Today's ETF Battle is epic because it's between two broad market ETFs that are among the largest and the most popular in the ETF marketplace. We've got the Vanguard Total U.S. stock market ETF, that's ticker symbol VTI, versus the Schwab U.S. broad market ETF, that's ticker symbol SCHB. Keep in mind, that's the first half of today's ETF battle. The second half will involve the winner of the first battle, which will advance to face the Fidelity NASDAQ Composite ETF. That's ticker symbol ONEQ. And again, that will be the second battle for today's doubleheader. Now, before we get started, a viewer shout out to Javier Jimenez, Shoal, Kevin Squires, Pushkit Bat, David Schmarter, Dividend Great Woo, Rachel V, and Vi Nigan, who suggested, wouldn't it be cool if ETF Battles had a sudden elimination or tiebreaker instead of split decisions? So what do you guys think about that? Give us your feedback. Also, a huge thanks to Good Guy 2 for sending us all the coffee and donut emojis. Now, most people are content to just send us one emoji of each. Good Guy 2 always sends us full sentences of coffee and donut emojis. Hopefully that's not his definition of a balanced diet. Nevertheless, whatever food he sends our way, we'll take it, whether it's virtual or not. So the first matchup is between VTI and SCHB. In terms of stock funds, this showdown is like Mary Poppins versus Mary Poppins, minus the umbrellas and the singing. These are two of the largest U.S. broad market ETFs by assets. They're also among the most widely held ETFs. And they come from two well-known companies, which are both fierce competitors, Charles Schwab and Vanguard. It's like, in baseball terms, the New York Yankees versus the Boston Red Sox. So helping us to judge today's doubleheader is Todd Rosenbluth.
There are two Met fans sitting across from you.
We've got Mets fans judging a matchup between the Yankees and the Red Sox.
Should have had like a Mets versus Braves or Mets versus Phillies analogy there, you know?
All right.
From Queens.
Queens, exactly. So that's who we've got judging. We have two Mets fans judging a battle between the New York Yankees and the Red Sox. How is that going to turn out? So we're glad to have with us Todd Rosenbluth, head of ETF and mutual fund research at CFRA, and John Davi, founder and CIO at Astoria Portfolio Advisors. Judges, it's great to see you again. Welcome back.
Thanks a lot, Ron.
Thank you, Ron.
So I forgot to mention that if the battle between VTI and SCHB ends in a overall split decision, it's going to trigger a sudden elimination tiebreaker, forcing me to choose a winner based on the total sum analysis presented by our judges. That means just one of these ETFs will advance and face ONEQ in the next battle. So the four battle categories are cost, diversification, performance, and then we've got our mystery category. That final mystery category is where our judges can pick whatever factor or several factors that they feel are important to the analysis. You can see my scorecard. It's ready to go. It's also very cramped. And so we're going to begin with the first battle category. Each of our judges can have 30 seconds to weigh in. We're going to start with you, Todd. Cost. Who wins the battle between VTI and SCHB?
So this, to me, is a split decision. Both these ETFs charge 3 basis points. That's among the cheapest products around. It's unlikely that the fees are going to come down much lower than that for products that are as large and as widely held. And these two, the volume is nearly the same. You have a little bit more trading volume taking place, I believe, with the Vanguard ETF, but more than sufficient. Both trade with tight spreads. This is a split decision. You can't go wrong from a cost standpoint, in my opinion, for either of these two ETFs.
That's a good start. Thank you, Todd. How about you, John? How do you see it?
I give the overall total cost of ownership edge to VTI. I mean, yes, manager fee is important, but you really want to look at, if you're trading, larger volumes. And what you see at VTI typically trades about $500 million notional per day, whereas SCHB trades about 75 million per day. So, in the old days when it was commission free, maybe you would lean on SCHB if you were custodied at Schwab. But now that you're kind of commission free, I don't see why you'd want to own it. I would choose the VTI, which is, Vanguard to Behemoth. I like the way they manage portfolios, how they do tax management, how they kind of handle creates redeem. So my overall edge is to VTI in that category.
All right. Thank you very much. We'll move on to the next battle category, which is diversification. Let's stick with you, John. Who wins the battle?
There's 94% overlap. They're very identical to put it in a blunt way. I mean, they're both tracking U.S. large cap stocks. Vanguard will have, all the stocks that are in, the U.S. equity universe, so 3,400, 3,500. SCHB is only going to have about 2,400. So you get a little bit of a tilt towards, value, small cap stocks, but not much. I think, we use VTI in some of our portfolio, so I would give the edge to VTI.
All right. Thank you very much. How about you, Todd? Do you agree with John's analysis on diversification?
I think John is nitpicking here. Yes, you've got an additional 1,000 stocks, but these are market cap weighted ETFs. So while there may be 94% overlap, it's a very small percentage that's in these extra 1,000 securities that are there. They're dominated by Apple, by Microsoft, by Facebook, by the heavyweights within the broader indices. So again, I hate to do another split decision, but these are nearly the same portfolios, which is not surprising given that they are broad market and in a market cap weighted approach. So this is not equally weighted. This is market cap weighted. You couldn't go wrong with either of these two products.
When you grow up as a Mets fan, Jets fan, Knicks fan, you're looking for any silver linings, and you're just used to losing, and so any silver linings helps, in my opinion.
Yeah, but you're trying to figure out who's coming up in single A ball when you're dealing with the 3,400th security within a market cap weighted ETF.
All right, we've got shots being thrown. So let's move on to the next battle category, performance. So let's stick with you, Todd. Who wins the battle between these two ETFs?
Boy, I'm going to be a broken record on this. This is not surprisingly, if the costs are the same and the portfolios look nearly the same, the performance record is going to be the same. Those are the two main drivers for performance. And so when we look at the 3-year track record, it is basis points differential between these two products on a 3 and a 1 year basis. Again, you can do no wrong with either of these two products if you look backward. And that's why we think this is another split decision. I'm sure John has a differing view because he's going to slice performance very narrowly. Wait for it.
Well, let's see, man. Don't put words in his mouth. John, how do you see it in terms of performance? Who wins the battle?
It must be all that winning you're used to as a college football fan of Michigan. We're just kind of used to being the winner. We're active managers at Astoria Portfolio Advisors. Our whole premise is active management of passive ETF. Every BIP does count. So I still would give the edge because if you look on a 3-5 year basis, VTI has outperformed very minimally, but when you're judged against basis points in the active management world, you will lean on any single edge you have, and there's a little bit of an edge in the VTI world. So,
okay, very good. Let's move to the mystery battle category. This is where our judges can pick whatever factor or multiple factors that they feel are important to this battle. Let's stick with you, John. What is your mystery battle category and who wins it?
I'm just going to go back to the daily liquidity. I think this is really important. VTI is much more liquid in the secondary market, trades $500 million notional per day, whereas SCHB trades about 75 million. Again, I'm going to emphasize, usually, in the wealth management world, if you custodied at Schwab, you would just pick Schwab ETFs because they were commission free. That's no longer the case. So I just don't see a compelling reason to own, any of these kind of, boutique market cap weighted ETFs out there. I think you stick with the behemoths, which are very liquid. They have very good tax management, seamless trading processes, how they handle ads, deletes. So I give VTI the edge in this category of just secondary market liquidity.
All right, very good. Let's go to you, Todd. Mystery battle category, what is it and who wins it?
So this time I'm choosing the Vanguard product. So the category is investor sentiment. And what we've seen this year has been about a $2.5 billion swing in favor of VTI, about $1.5 billion of net inflows into VTI, and about $1 billion of net outflows to the Schwab product. Now, some of that is probably John and the money that he's putting to work towards this, but I'm sure not all of that $1 billion plus that we've seen going into VTI. So investors are certainly speaking with their wallets and putting money to work within the Vanguard product, and I think that's certainly something to take notion of. So VTI for the mystery category of investor sentiment.
Okay, very good. And so based on my scorecard, we've got an overall winner between VTI and SCHB. The winner is clearly VTI, and our judges were split decision on everything but the mystery category. But that little edge in the mystery category pushed VTI to win this particular battle. We need to move then to our next battle, which is the second half of today's doubleheader. And so VTI is going to face the Fidelity NASDAQ Composite ETF. That's ONEQ. And we're going to go through those same battle categories. Our judges are going to give us their analysis in each of their respective categories. So we're going to begin with cost, and we're going to start with you, Todd. Who wins the battle on cost between VTI and ONEQ?
So VTI, just to reiterate, still charges 3 basis points. They haven't cut it since we started this program, although it inevitably will go even lower. The Fidelity product, I believe, costs 21 basis points, so 7 times more expensive product. It's still relatively cheap for a broadly diversified product, but nowhere near, in the case of an index-based ETF, much cheaper, much lower volume also, which I'm sure John will talk about from a liquidity standpoint. So VTI, hands down, is the cost winner in our book.
All right. John, do you agree with that analysis? Who wins the battle on cost?
Yeah, VTI wins on cost. I mean, they're really different animals. I mean, one's focusing on growth stocks. One is U.S. large cap index, broad-based index for the most part. But yeah, just purely on cost, VTI. But I don't think I would really kind of compare the two. It's not if and, it's kind of like, do you want to have both of them in the portfolio, which I think there's a case to own both ETFs. So.
All right, the next battle category is diversification. Let's stick with you, John. Who wins the battle?
I would say that VTI is more diversified in the sense that, let's say like technology is 25%, whereas in ONEQ, it's 42% technology. I think there's a compelling case to own technology, so I don't want to shy people away from owning tech and growth. I think what you have is, the Fed is anchoring interest rates at 0. Technology tends to be longer duration in general. They tend to have kind of higher growth and higher earnings. So, we're living in a world where earnings were coming down pretty significantly. Any company that was able to produce higher growth had a massive bid, which is why you see, ONEQ is up 23%, whereas VTI is only up 5%. So yes, VTI is more diversified, but I kind of still like ONEQ in general. So I'll give the edge to VTI, but I'm pulling for ONEQ to have a portfolio allocation.
Okay, that's excellent analysis. Let's shift to you, Todd. Who wins the battle when it comes to diversification?
So with a broadly diversified ETF, it's kind of like a supermarket. You want to have access to all of the aisles to be able to go into, depending upon what it is you want to put into your cart. With the case of ONEQ, it's as if you can only shop in the first, third, and eighth aisle. It's only choosing securities that are available that trade on the NASDAQ. So it's leaving out companies like Johnson & Johnson, companies like Merck, companies like Nike. These are blue chip companies. It's just not diversified. It's a very targeted in that case. So VTI, broadly diversified, you get the whole supermarket to be able to shop in and get the benefits of all the different aisles.
All right, that's a good analogy, and it's getting us hungry for some soup. I would defer to matzo ball soup. I haven't had that in a while, and I'm getting a craving for it. Let's shift to performance. Todd, tell us about performance. Who wins the battle between these two ETFs?
So ONEQ is a growth ETF, essentially. And so not surprising in the last 1, 3, and I think even 5 years, growth has certainly outperformed the broader market. And so you historically would have performed very well with ONEQ. Performance is much better than a broadly diversified, cap-weighted, both growth and value ETF of VTI. So if you want to only look in the rearview mirror, then ONEQ is by far the winner in that category.
Let's move to you, John. Performance, who wins the battle?
I think Todd's right. It's won on performance for good reason. Tech, higher growth, longer duration, interest rates have come down, earnings have come down. So, investors have been bidding up technology stocks, and you get a lot of tech exposure with ONEQ. So I agree with Todd. I think the winner is ONEQ.
All right. Mystery battle category is up next. And we're going to stick with you, John. What is your mystery battle category and who wins?
In my estimation, I do think that you want to look at beyond diversification. Todd makes a good point that, that ONEQ is just NASDAQ, listed stocks, which sounds crazy. You would just pick, 3 aisles in a store. I would just encourage investors to look beyond that and just kind of look at your portfolio. It's good to have VTI as a ballast, but I think you want to overlay kind of growth and, stocks that do well when you have interest rates at zero. So I'm pulling for ONEQ, and I do want it to have a little bit of an edge. So I think overall composition, is my mystery category, and I do give it a little bit of an edge to ONEQ.
All right. Very good. And what about you, Todd? Do you agree with that analysis? What is your mystery category and who wins it?
So I'm going to stick with the same mystery category that we did for the VTI battle earlier in this program of investor sentiment. And again, the Vanguard product has been highly popular. The Fidelity product, despite it performing quite well, I think is under the radar for many investors. That probably is appealing to some folks to find something that no one else has. But I think that just the sentiment is much stronger towards a broadly diversified, core, cheap product. So VTI would be my winner in that book too.
Okay, very good. And we're going to give our judges one last opportunity to wrap up their overall battle winner in this broad market rumble. We began with VTI versus SCHB, and now we're down to VTI versus ONEQ. So let's stick with you, Todd. Who is your overall winner between VTI and ONEQ?
So VTI is the winner. I think it's battle tested. It's broadly diversified. It's extremely cheap. It's extremely liquid. The sentiment is in its favor. It happens to also rate favorably to us at CFRA, whereas ONEQ does not. We think this is a much better product for investors that want a core part of their portfolio. VTI, to me, is the hands-down winner. All
right. John, who is the overall battle winner between VTI and ONEQ from your perspective?
I don't want to focus too much on performance because I think there's a lot more. But when I look at fundamentals, I look at earnings growth, I look at growth in the future, I think that, growth stocks can be well positioned. I'd want to own both in a portfolio. I think VTI could be your beta and ONEQ could be your alpha overlay. I like ONEQ, I like growth, I like tech. I think that's kind of it's going to continue to do well as we go through a world where, the Fed is ranking interest rates at zero and where you're going to have, a decline in earnings growth for the next, 6 months and next year. So I kind of like ONEQ as an alpha overlay.
Okay, so your overall winner is ONEQ.
Yes.
All right, there you go. So that's it. We're going to call this battle a split decision. You guys agreed on cost, diversification. You agreed on performance. You disagreed on the mystery battle category and the overall battle winner. And I think there's merit for each ETF. And I think that's the key takeaway for today's battle is to look beyond diversification and to think about why you own the ETF and actually maybe having both in a portfolio, one, as John mentioned, as a core holding, and maybe the other as a satellite or complementary holding. And I think this particular battle, our judges helped us to sort through very well. And so, again, great job for today's ETF battles. I mean, it was a full menu. It was a double header. And that's sometimes what happens when we got a lot of ETFs to analyze. So great job to both Todd and John for today's analysis, and we look forward to catching up with you again very soon. So which ETF battles would you like to see in our next episode? Be sure to hit us up on our YouTube comment section. You can also find us on Twitter at ETFguide. And thanks again for watching. I'm Ron DeLegge with ETF Guide TV.